Welcome back. California home sales in May stalled out as mortgage rates hit the highest levels in about 5 months. In contrast, California's median sold price reached a new record high, driven partially from a significant rise in sales of higher priced houses. However, there's still approximately 40% more houses for sale right now compared to a year ago statewide, which is a welcome relief for home buyers, yet we still have far fewer compared to pre-COVID levels. This is based on a brand new report from the California Association of Realtors, and in today's video, I'm going to share all the details. And by the way, if you guys want a real estate agent referral, please check out my website, which is realestateteamfinder.com, or email me at jason@meetjasonwalter.com if you guys want to buy or sell a house in the greater Sacramento area. In any case, let's go ahead and dive right in because I have a lot to share here. So here's a slideshow I pulled from the California Association of Realtors website. I won't share all the slides because this video would be like 13 hours long. Instead, I kind of whittled this down to what I feel you guys should know regarding what's happening right now in California. So for the state as a whole, there was 272,000 existing houses that sold. These are detached single-family houses, excluding multifamily units, and of course, excluding brand new home construction. This, by the way, is a seasonally adjusted and also an annualized rate as well. In any case, that is down 6% compared to 1 year ago, which is fascinating because, again, last year we had basically multi-decade lows regarding home sales. And right now we're on track to have fewer home sales this year in California, also statewide as well, compared to last year. And you can see that right here because year to date, sales are flat. So we basically had the same number of home sales in May compared to June, which is absolutely wild. Regarding home prices, and I'm talking about the median sold price, that increased to $908,040. So half of the houses that sold in May sold for above that amount and half sold below. That's what the median number means. That's an increase of nearly 9% year over year. And also this is an all-time record high as well. I have a lot of more data to share regarding that based on my own analysis of CARS data here in a little bit. Meanwhile, the month supply is only at 2.6 months, still relatively low levels, especially compared to historically speaking or compared to pre-COVID levels. But that is a fairly significant rise of about 24% from May of 2023. Days in the market, that did decrease by 6%. So houses are selling faster compared to last year, on average selling about 16 days. So you list your home for sale, in about 16 days, you accept an offer from home buyer. So houses selling about 2 weeks on average in California. And by the way, this is part one of my 2-part video series I make each and every month regarding the California housing market. I also post a video regarding the Sacramento housing market about once a month as well. So stay tuned for that here in a little bit. All right, let's talk about sales because this is just absolutely wild. Look at this. So sales compared to April decreased by 1.1%, but sales tend to rise in the spring and early summer months. But despite that, we're down from a year ago and also down compared to the previous month. Right now, about 272,000 is the sales pace for May. It's more normal to see a sales pace around 400,000 units. So for example, back in 2014 through 2019, around 400,000 was a more normal number. Now we're less than 300,000. So a lack of houses being sold. And let me just zoom in here because looking at 2022, which is right here, basically sales fell off a cliff. We were at more normal levels, and then the last half of the year fell off a cliff. 2023 in the US as a whole, we had a multi-decade low regarding sales. And now this year, we're still at relatively low levels. In my opinion, is due to the rise in mortgage rates this year, which is limiting home sales so far. Let's also take a look at this because we're seeing more sales of higher priced houses, like I mentioned at the very beginning of this video. This is something we've been seeing on a national level, but also in California for several months. So for the month of May compared to May of 2023, there was a 30% increase of houses that sold for over $2 million, in the range of $1 million to just under $2 million, an increase of 9%. In contrast, houses that sold for the range of $500,000 to 749,000. That decreased by 5%. And all these price segments below that decreasing compared to a year ago. So we're seeing sales at the upper range of the market rising, which is contributing to the rise of the median sold price statewide. We're also seeing that here nationwide as well. So what's wild about this is not right there, is this right here. So for the month of May, 37% of all houses that sold were selling or did sell for over $1 million. 1 year ago, that ratio was only 32%. In contrast, in the range of 0, let me know if you guys got a house for free, but for houses that sold for less than $500,000, that ratio was only 22% of all houses that sold this May. 1 year ago, we were at 25%. So fewer sales at the lower range of the market and more home sales for higher priced properties. Another way to look at this is this right here. So sales of less than 500,000 is the blue line. The gray line is houses that sold for over $1 million. Looking at pre-COVID levels back in 2019, that ratio was about 45% of houses that sold for less than 500,000. And back in May 2019, that ratio for houses over $1 million was about 20%. So only 20% selling for over $1 million. So 80% sold for less than $1 million. Now that ratio has been flipped, right? 37% did sell for over $1 million, where only 22% were less than 500,000. Also, according to the California Association of Realtors, that ratio of 37% is the biggest share in at least the past 5 years. And again, this is all contributing to the rise in the median sold price in California. Now, looking into the future here, let's look at pending home sales. That has been relatively flat for about 6 months. Pending sales basically decreased by 0.6% from 12 months ago. So this implies we're going to see a relatively low level of closed home sales in the coming months because we're not seeing a sharp rise in pendings like we saw in 2020 and 2021, for example. Okay, let's talk about prices because I have a lot to share regarding that. The median sold price in California, $908,040, a small increase of 0.4% compared to the previous month, but we're up by nearly 9% year over year. According to the California Association of Realtors, stronger sales of higher priced properties contributed to solid median price growth, especially since $1 million home sales in California have been rising more rapidly than more affordable counterparts in the state. So not only are we seeing sales of higher priced properties, we're also seeing new listings of more expensive properties as well, and a lack of more affordable properties hitting the market. Sales in the $1 million and higher market segment rose by 15.5% year over year in May, while sales for less than $500,000 decreased by 12.2%. All right, let's get a little bit nerdy here because I want to share my own analysis of their data. So here's a look at overall California's median sold price going back to, I think it was going back to, when was this? The early 1990s. So the two columns I pulled from their website, several years ago were these two columns. Everything else is based on my own analysis. So for the month of May, again, we're at 908,000, an increase of 8.7 compared to 12 months ago, a small increase of 0.4% compared to April. So this actually surpasses the previous month's record high because back in April at 904,000, that also was a new record high. So now we're up by about $4,000 compared to the previous month. The previous peak back in 2022 was only 893,000. Now we're up by nearly 15,000 compared to that peak. When looking at the year-over-year change, up by 8.7%, this is quite the turnaround compared to 1 year ago. The prices decreased by 6.5%. So May of 2022 compared to May of 2023, we saw a decrease of 6.5%. Now we're up by a whopping 8.7%. This also marks the 11th consecutive month of year-over-year gains after 8 consecutive months of decreases. As you can see right here, from November of 2022 through June of 2023, we saw a decrease in prices. But ever since then, we've been seeing gains. However, though, this 8.7% increase is actually lower than the long run average going back to 2010. Because based on my nerdy Excel formula there, the gain or the change in home prices from each and every May going back to 2010 is an increase of 9.4%. This year, it's at 8.7%. The increase of 0.4% compared to April is a seasonal gain because home prices tend to increase in the first half of the year. Then the second half of the year, they tend to have a decrease in sales and home prices. So like I mentioned here, we are a seasonal increase, but it's less than normal though, because the average April to May change going back to 2010 is an increase of 1.8%, whereas this May, it actually only increased by 0.4%. Also, for comparison's sake, prices increased by 2.9% in May of 2023 compared to April. Now we're only up by 0.4%. Therefore, prices are still gaining ground, but the growth rate is actually slowing down. It's also normal, like I mentioned, to see home prices start to decrease starting around July each and every year. But wait, there's more. I want to share how the gain this year, up by 8.7%, how's that compared to years past, especially compared to pre-COVID levels? So for example, the change from May of 2018 through May of 2019 is a small gain of 1.7%. In contrast, in 2018, we saw a gain of 9.2%. 2017, we're up by 5.8%. And also, just for fun, I added the change in the median sold price from May of 2008 through May of 2009, a giant decrease of 31.9%. Whereas this year, we're seeing gain of nearly 9%. On top of that, the gain in prices over the past 4 years since May of 2020, a giant increase of 54%. What's also wild about that is that back in May of 2020, the average 30-year fixed rate for a 30-year fixed rate mortgage was around 3%. So 2020, what was that, 4 years ago already, we had 3% rates and also home prices much less than we have today. Let me just look real quick. May of 2020, we're at $588,000 was the median sold price. Now it's over $900,000. So home prices increased big time, but on top of that, rates more than doubled compared to May of 2020 as well, making housing affordability a huge, huge issue for home buyers right now. All right, going back to this slideshow from CER, the price per square foot reached a new all-time record high in May at $446 per square foot, up compared to 1 month ago, and a giant increase compared to 1 year ago. Meanwhile, the sale price to final list price ratio has maintained at 100% for about a year now. Hasn't really changed a whole lot as well. This means on average, for the houses that did sell in May, they sold for the seller's final list price. Also, take a look at this because according to them, the share of houses selling above the seller's asking price jumped to an 11-month high as the market still remains very much competitive. As I'll share with you guys here in a little bit, regarding the month supply, we're still at relatively low levels in California. Every market's different. I'm just talking about for the state as a whole. So for the month of May, 51% of all houses that sold above the seller's list price. 1 year ago, that ratio was at 48%. A best way to kind of describe our housing market is that it's competitive, but not nearly as competitive compared to the early part of 2022. And the data supports that. Back in April, that ratio was at 72.9%. So about 73% of all houses that sold above the seller's asking price, which is absolutely insane. Now that ratio is at 51%. It is an 11-month high, but it's not nearly as high compared to the craziness of 2022. Okay, let's change gears slightly here and talk about inventory levels in California. The month supply is only at 2.6 months right now. 1 year ago, we're at 2.1 months. Also did some digging for you guys, looking at historical averages going back to the 1990s, I believe. So for comparison's sake, the peak around the great financial crisis of 2008 was a whopping 16.6 month supply set back in January of 2008. Now the month supply is at 2.6 months. Absolutely insane. We had a glut of inventory, to say the least, in 2008, and now we're still at relatively low levels. So for example, 2.6 months this May is below the average from January of 2016 through December of 2019. During that time frame, the average was at 3.4 months. Now we're well below that at 2.6 months. Here's also a look at inventory levels. Again, these are for single family houses in California over the past several years. In regards to houses for sale in California, we have been seeing a seasonal increase so far this year. It's actually rising faster though compared to last year, but we're not rising at the same rate of 2022. So for example, in January of 2022, I'm just kind of eyeballing this because they don't provide actual numbers for us. Back in January of 2022, we had around 15,000 houses for sale. By the time we hit May, we had around 30,000. So inventory doubled in about 5 months. In contrast, even though we have more houses for sale compared to last year, back in January, I want to say, let me know what you guys think about this. I think this is looks like about 20,000 houses for sale. Now we have around 30,000. So inventory did not double during the same time frame as the same time frame in 2022. And the reason why home prices tanked in 2022 was the rate of increase, even though inventory did not even get close to pre-COVID levels. And the data actually supports that because during the summer months of 2022, inventory did not surpass 40,000, or is very close to around 40,000. In contrast, 2018, 60,000, and also in 2019, around 55,000 houses for sale. So therefore, the reason why we had a decrease in prices in 2022 was due to the rapid rate of inventory, not because inventory surpassed pre-COVID levels. In any case, looking at active listings or housing supply, that it did increase by 38% from 12 months ago. But looking at the same time frame in 2022, inventory increased by about 60% compared to May of 2021. This growth rate, though, of a gain of 38%, is the biggest growth rate in about 15 months, though. This, of course, is giving more options for home buyers, which also should limit home price growth in the coming months as well. Let's also look at the number of new listings, because new listings were decreasing year over year for about 20 consecutive months. But now for the past for the past 5 months, we've been seeing gains compared to the previous year. So right now we have an increase of 18.6% more new listings compared to 1 year ago. That was at 23,421. Back in May of 2023, just under 20,000. The big change though that I noticed, I've been making this video for you guys for several years now, is that the gap between this year versus 2019 is actually getting more narrow. So for example, back in April, new listings were down 32% compared to April of 2019. Now, jumping to this May, it's now only down 28% compared to May of 2019. We still have a long ways to go though, because new listings are much lower this year compared to 2018 and 2019. And in addition to that, we have approximately 37% fewer houses for sale this May compared to May of 2019. All right, let's change gears and talk about how fast or how slow houses are selling. This last May, they sold in about 16 days. 1 year ago, it was at 17 days. So not a lot of movement regarding that, but houses still selling very, very quickly in about 2 weeks on average statewide. In addition, we are seeing a increase of reduced price listings. It has been growing very, very slowly so far this year. That ratio is at 32.9%. Look at this year compared to 2022 though. Let me kind of zoom in here. So looking at this year so far, the share of price reductions has only increased in April and May. So a small increase compared to the previous months. In contrast though, look at 2022. January of 2022 is right about right here. January, February, March, April. The share of price reductions started increasing big time starting in May and lasted through the late summer and early fall months that year. Now just zooming back here, you can see here that the share of price reductions back in The summer months of 2022 was in the range of about 40 to 45%. Now it's only 33%. With that said, please comment below with your biggest takeaways from today's video. My biggest takeaway is that we have record high home prices, even though we have 7% mortgage rates for basically all year, which is just mind blowing. I would never guess we have record high home prices on a national level and in California, even though inventory is up compared to last year. And on top of that, we have still elevated rates as well. But what's your biggest takeaway? Please leave a comment below. Also, if you guys want a real estate agent referral, check out my website, which is realestateteamfinder.com. I appreciate you guys watching today's video so much. Hope you guys have an awesome day, and I look forward to seeing you on the next video.